everyone, and welcome to the CAW Network USA webinar, Price Wars, How to Command Higher Fees Without Going to Battle with Your Clients, featuring our guest speaker, Eric Solbakken, founder of the Accountant Success Formula. I'm David Powell, CEO of Chartered Accountants Network USA, Worldwide Network USA, and before we begin, we have some housekeeping announcements. There is a handout available about Accountant Success Formula. You can download it from the icon at the top right of your screen. The presentation today will be available on request if you wish it. Just note that you would like to receive it in the comments section of the survey when you exit the webinar. The survey will come up automatically when you exit. CPE. This is a CPE eligible webinar if you've requested it. To qualify, you will need to answer the polling questions we will be asking. There are 4 polls during the webinar. You need to answer at least 3 to be eligible. The format of this webinar is a 60-minute presentation, including this introduction. You need to attend for at least 50 minutes to be eligible for CPE. If you have questions or comments, note them in your Q&A tab, which is also at the top right of your screen. At the end of the event, when you exit, as I mentioned, there will be a survey, and at that time you can also let us know if you would like us to connect you to our presenter. Our learning objectives today: by attending, you will be able to clarify which clients drive true profitability in their firm versus those eroding margins, apply a simple, repeatable process to increase fees with less friction, design pricing around value instead of hours or history, create a plan to offload low-value clients while protecting revenue, reduce time spent on time-suck work, and redirect it to higher value engagements. Position yourselves as trusted advisors rather than as transactional service providers. And now let me launch our first poll. And while you are responding to it, I'm going to introduce our speaker. So Eric Solbakken is a CPA, CA speaker, business advisor, and creator of the Accountant Success Formula. He worked in public practice for over 25 years, providing accounting, tax, and advisory services to incorporated business owners and their families. He discovered strategies that were so effective that they allowed him to triple his revenues and create a successful accounting practice, which he later sold for a multiple on billings. He now shares these strategies with other accountants around the world in his proven system, showing them how to maximize profits, attract the best clients, and get the time and freedom they deserve. Okay, and now what I'm going to do is close the poll and share the results. So I'm closing the poll and I'll share the results. The results being that we have 12% of you are owner partner in a CA firm, 4% are employees, 28% are owners of other firms, 44% are employees of other firms, and 12% are none of the above. So with that, Eric, I'd like to hide the poll and pass over to you.
Awesome. Thanks, David. All right, so I can see that we have a fairly small splattering of firm owners. Most of this presentation is going to be focused on the firm owners. So as you're listening to the presentation and watching, potentially consider how this could apply to your business as well. But again, my main focus will be on the owner-manager business and the accounting firm owner. So yeah, so what we've got is how to increase your prices without going to battle with your clients. One of the things that I will say here is that I'm going to make this fairly interactive. There's going to be a bunch of stuff I'm going to give you to be able to write down. So make sure you've got a pen or paper, or you've got a Remarkable or an iPad or something, whatever you take your notes on, because we're going to be doing some writing so that you're interactive, so you're not just sitting there listening to me go on the entire hour. Sound good? All right, so here we go. Price wars, how to increase your prices without going to battle with your clients. So what we've got is, the first thing I just want to highlight here is, like, who is this Eric guy and why should we listen to him? Now, David was so kind as to give me the introduction and to kind of give you a small outline. I'm just going to give you a little more in the PowerPoint presentation here. That my professional background is, I have a BA, oh, there we go. I've got a BA in psychology and economics. I did a double major in the University of Victoria, British Columbia. I'm a chartered accountant, also now a CPA with a specialty in tax. And so I've got over 37 years experience in public practice in the accounting world. 26 of those years was in public practice. So I had 18 years in a multiple partner firm. And then I ended up, that partnership collapsed and I started my own firm. And I did that, ran that for 8 years. And then, as David mentioned, I sold it for a multiple of billings. And those last 8 years that I worked in my firm, I worked way less and made way more money than ever in the 18 years combined. It was quite staggering, actually, when I looked at the numbers, because I am an accountant, I like the numbers. And so in the last 11 years, I've been working with CPA firms. After I sold my accounting practice, I had a bunch of accountants asking me how I ran my firm and how I ended up selling it. And so I created a program called the Accountant Success Formula, and I have an online course. I've got a book. If you can see the screen now, I've got a book here. I've got an online program, and I do one-on-one coaching, group coaching, and an online self-directed program on my website. So I'm going to give you a little bit of my personal background. So I gave you the professional background, and here's the personal background. And so I'm also married to a CPA or CA. Yes, and that sounds very funny, and you're wondering how our dinner conversations are around the table. No, we do not talk about taxes anymore because I consider myself a recovered accountant. I haven't done a tax return in over 11 years now, but I'm a father of 3. My kids are 23, 21, 11. And what I do for fun, I do boating. I like to ride my Harley, and I also play in a heavy metal band. I'm the drummer and lead singer in a heavy metal band called Rain Down. So if you're interested in seeing what that's all about, it's raindown.rocks. 80s heavy metal. Yes, I remember the 80s. I had the permed mullet, and man, I still love the music. So the real question you're probably asking yourself right now is, why did I share all this personal stuff with you? Well, I want to get to our first kind of exercise where I want you to start thinking about what you like to do. And because this kind of sets the stage for the rest of the presentation, because if there's nothing that's motivating you to change, then you're not going to change. So let's get thinking about the exercise. The first exercise here is, what would you like to do for fun outside the office? So if you just take yourself a piece of paper and write down 3 columns, and then we're going to go what and who and why. So just give you a couple seconds there to write that down. And what I'm going to have you do, and I'm going to give you some time to write this out, is what do you like to do? Who do you like to do it with? But most importantly, why? Why do you like to do this? And again, I'm going to give you a little bit of time. I'm going to play some background music here. Hopefully it comes through, and we'll find out if you can hear it or not. But I'm going to give you about 60 seconds to do a little bit of thinking. This is time for you to actually think about yourself. What really matters to you? What do you like to do? Who do you like to do it with? Most importantly, why? And so let's give you a little bit of time to do that. Give you another 30 seconds here. Another 10 seconds. All right, there we go. David, did you hear that music on the, can you end up hearing that, or am I just playing?
I did, all good.
Okay, great. Hopefully it's not too loud for everybody. So there you go. So a little bit of writing down. So we've set the stage here. So now let's get right into the presentation, price wars, how to increase your prices without going battle to your clients. For myself, I know what was a real pain for me was trying to get my clients to pay for my services, and especially how to pay a higher price for my services, because I kept seeing all my clients that I was working for making all this great money and having no problem billing their time, especially lawyers. Lawyers seem to get paid no matter what, but I think that's based on fear more than anything else. Not that I'm here to shoot down the lawyers. I'm probably more jealous than anything else. But what I found is what I'm going to share with you here is all of the mindsets and the strategies and the approaches that have worked for me and all my clients that I've worked with. So today we're going to go over 3 questions about increasing your prices. We're going to go through why, what, and how. So those are the 3 questions we're going to go through: why, what, and how. So let's talk about why. So the simple question is, why would you want to increase your prices? Okay. And so just to set the stage for you, I believe that every CA wants and deserves 3 freedoms. They want a certain amount of money, they want to work with certain types of clients, and they want a certain amount of free time. So I call these the 3 freedoms in the account success formula. It's money, clients, and time. And which is interesting is that, especially in the accounting profession, when I was working in it, I felt like I was being driven by the profession. I was being driven by the business model instead of I was in charge of my business model. So I do weekly videos called success tip videos that I do to my email list. And if you're interested, you can join that list on the accountantsuccessformula.com. And I always say at the end of every video, if you take back control of your business model, you can take back control of your life. So for me, this is all about agency and being able to have control of these things. When I was in public practice, I didn't feel like I really truly had control over these 3 freedoms: money, clients, and time. So I want to make a certain amount of money. I wanted to work with a certain quality client. I wanted to have a certain amount of free time. So, and I'm going to show you in this presentation how I believe that increasing your prices will give you these 3 freedoms. Okay, so let's just talk about, I'm going to talk about these 3 freedoms at the front end here. So money freedom, it's simple math. We're all accountants, so we understand the math. Revenue minus expenses equals net income, and it's quite staggering how many CAs forget this. But for the purposes of my presentation here, it's like we either increase our revenues or reduce our expenses. And so I focus on the revenue side, and I believe that there's a ton of expense dropping that's going to happen in the next 5 years. It's going to be staggering given AI's propensity to move forward. We're going to be able to crush the expense model, which I think it's even more important today to present ourselves on the revenue side to be able to have the right conversations with clients so that you're actually capturing more revenue, because the expense model is going to crush. But that's not what I'm going to talk about today. I'm going to talk about the revenue side. So obviously we make more money, we have more money freedom. So on the client freedom, I've also noticed that there's a very strange phenomenon that happens. I call it the PAIC. Lower prices tend to attract messier and needier clients, and the higher prices attract cleaner and more appreciative clients. So very curious if anybody wants to put it in the messages what they think PAIC stands for, but I'm going to show you the graph that I've created. And I believe that there is an inverse relationship with the price and the amount of pain we experience with our clients. So as the price is higher, we actually experience less pain. When the price is lower, we experience more pain. So David, did anybody write in the comments what they think the PAIC stands for?
Not yet, no, but there's a couple of other items there about Suleiman is asking that accountants philanthropy using time, talent, and treasure as an example of how to think about giving back for the common good. So that's something you may come to in the Q&A section.
Okay. Well, the PAIC stands for the pain in the ass curve. So basically,
and as you said that, we just had David White put it into the chat or the Q&A.
Perfect. It's the pain in the ass curve, because this is what it is. There's a interesting phenomenon that happens here, that there's an inverse relationship, in my experience in the accounting profession, that the lesser the price, the more pain we have. The higher the price, the better the client is. So then let's talk about time freedom as well. So time freedom is, again, it's simple math. And I do have video blog that I do the success tip videos, what I talk about. And I did this in there's 5 ways to 600K in my video blog. And what I suggest accountants do is that they pick your revenue target and then reverse engineer your revenue model. And okay, so reverse engineer it. So figure out how many clients you want. So for example, here, I'm going to do a $1.2 million revenue model. If you want to get to 1.2 million in revenue model and think of it in terms, excuse me, think of it in terms of the amount of clients you need. So if you had $300 tax returns, you're going to need 4,000 clients. That's going to get you to 1.2 million. Again, as you increase the price, you have less and less clients. You're going to end up having more and more free time. So in this example, my apologies for the frog in my throat. Hold on one sec. As you increase your price, you can reduce the amount of clients you have, and therefore you can expand your freedom of time. So there's these simple examples. So here's the 3 freedoms again. This is money, clients, and time. And David, I do believe, my experience has been that higher prices is the path to these 3 freedoms. And so we've got our next polling question here, David. So if you want to fire that one up, and we'll see what everybody says.
Okay, launch the poll.
There we go. Which freedom is the most important to you? Money, clients, or time?
Okay, we've got 89% of our attendees who voted, so I think that's close enough. It's now up to 91. So what I'm going to do is close the poll and share the results with you, and you will see that 72% is time, 22% money, and 6% clients.
Yeah, and this is very typical of my experience with accountants as well. Is that the wish is for time freedom. It's a time freedom issue, and everything I'm going to show you today is going to show you actually how to increase your time as well. So let's go to exercise 2 now. What I want you to do is get your pen out, and then what I'd like you to do is focus on your freedom goals. So what are your 3 freedom goals for yourself? So you get to do a little bit of time. So what we're going to do is we're going to break this off into 3 sections. Again, if you get a piece of paper with 3 columns, write down your freedoms on the left-hand side, which will be money, clients, and time. Then the middle column will be the present, what's happening today, and then into the future. So what I would like you to do is I'm going to give you about 60 to 90 seconds to get a little bit of writing done down here and figure out how much money are you making today and how much do you want to make in the future? What are your clients? What's the quantity or quality or the work that you're doing today? And what do you want it to be in the future? And the same thing with the time. How much time are you spending today? How much free time do you have on the inverse of that? How much free time do you want to have in the future? Because goals need to be set for our eyes to hear and our eyes to see and our ears to hear what our brain is looking for. That's the only thing that's important, is that we want to trigger the brain to actually look for the right thing. So setting up goals into the future is really important. So I'm going to give you about 60 to 90 seconds to write down what your 3 freedoms are in the present and then what you would like them to look like in the future. And again, we're going to have a little bit of music in the background. Here we go.
Yeah, we lost the music, Eric.
Okay, give you another 30 seconds. All right, there we go. Okay, so let's continue on with our presentation here. And so let us continue. The next question that we're gonna cover off. So now we've covered off the why. Why would you want to increase your prices? Because it's going to increase your three freedoms of money, clients, and time. And so again, the next question, which I set up at the beginning, says now we're going to go to the what. So we start with why, now we're going to go to what. What impacts increases in your pricing? And I'm curious if anybody recognizes this guy. Anybody know who that is? Yes. Probably the most successful investor in the world, Warren Buffett. And Warren Buffett has a great way of simplifying things. And he goes, price is what you pay, value is what you get. I'm going to say that one more time. Price is what you pay, value is what you get. And this was referenced in he referenced this idea in his 2008 letter to Berkshire Hathaway, arguably one of the most successful investment companies in the world. And so the question becomes, if we want to increase our prices, then we know that price is a function of value. Price isn't a function of time, even though in my first career, in the first 18 years of my career, I thought that the price was a function of the amount of time I spent in my accounting firm, but that's not what the value is to the client. The value is the result. So if we can get a higher value for the client, we can get a higher price. And if there's a lower value, they get a lower price. It's really quite logical. So if you're going to buy a lower value vehicle, a lower priced vehicle, it will be lower in value and versus a higher priced vehicle. And I'll get to some examples a little bit later on. But here's the problem. Value is like beauty. It's in the eye of the beholder. So what someone thinks is valuable and is worth a price, someone else won't. So how many of the attendees would like to buy a Lamborghini and see that a Lamborghini has enough value? Well, for some people, that Lamborghini is worth $500,000. They'll buy it all day long. It's got the value there. Other people are like, nope, doesn't have the value. There's no way I'm going to pay that much for the Lamborghini. So value is subjective. It's not objective, it's subjective. And so what we see is that the way to get higher prices is, the critical question is, what do your clients find valuable? So what is it that a client in an accounting firm is going to find valuable? And again, for those that are listening into this webinar and they're not directly in accounting, in the accounting world, this value and price function is what holds the entire economy together. It's every business runs on this. So you can apply it to you as well. So in this case, what I'm going to talk about is actually in the accounting firm model, there's 3 keys to increasing value. I believe there's 3 keys that you can use to increase the value you're delivering and therefore claim your 3 freedoms. So there's a direct linkage between the what back to the why. And so here's the first key in increasing your value. And it's number 1 key is positioning. So positioning, and I'm going to give you a little background story. So after my first 18-year partnership ended, I began researching and looking for new methodologies. So in complete disclosure, I thought I was winning the game. I went straight out of university. I started studying accounting right away. I got articling position in between my university terms in the accounting firm. So I started when I was like 19 years old. And so I was 18 years in this firm, and then I worked my way up to become a CPA or chartered accountant. Then I became a tax specialist, and then I became a partner. And I thought I was winning the game, right? But what happened was the partnership collapsed. My partnership dissolved, and I had to go separate ways. And so what happened is that I was completely despondent. I had spent 18 years of my life sweating, slaving, driving, and all of a sudden it was all taken away. It was gone. Poof, everything was gone, and I had to restart. So I went and restarted my next accounting firm, and luckily my lovely wife Erin is also a chartered accountant, and so we said, well, let's start our own firm. And so we did. But when we started our firm the second time, we actually became more like entrepreneurs. So we had to put the desks together, we had to figure out all the tech stack, we had to figure out, you know, where we're going to put the file, what color the file folders would be. And for anybody who's been around long enough knows what I'm talking about when it comes to paper, pushing those around. And I decided that I'm going to actually change the model, because I thought, why have I worked and I slaved for 18 years and it all just disappeared, and it was such a slog that I was like, I want to create something new. So what happened is that I ended up going and searching and reading up on every self-help book I could possibly find. And one of the pivotal moments for me was reading Firm of the Future by Ron Baker and Paul Dunn. Huge change in my life. And another one was I came across something known as the value curve. And the value curve is a diagram that actually showed where value is created in an organization's products or services. And more specifically, I found one through Rick Payne, and Rick Payne was a co-founder of Results Accountant System. And I don't know if anybody remembers Rick Payne or knows who Rick Payne is, but he was also working with Paul Dunn as well. And he had a company called the Results Accountants System many, many decades ago now. But when I found the value curve and it explained the accounting profession so well, I was like, you know what? This is incredible. I asked Rick, and he graciously granted me permission to share this value curve with, and so I've got it in my book, The Accountant Success Formula. I've shared it and I get to share it also in my coaching programs, because Rick really wanted to impact the accounting profession. So he was like more than happy to allow me to use it. So every time I present on this value curve, I'm very clear that this is not created by Eric. This was created by Rick, and it's incredibly powerful. So what I'm going to do is I'm going to show you what this value curve shows when it comes to the accounting firm model. So what we have is we have on the horizontal plane, we've got, so we call it the compliance moving to reliance. And then there's a dotted line between the two. So we call it the left side of the curve is commodity services and the right-hand side of the curve is value services. And what he's done is he overlaid onto this and said, there's a value going up and down. So we've got a horizontal compliance to reliance, and then the vertical is price insensitivity to price sensitivity. So, and what it is, it's a function of relative value that's added. So the more value, the more price insensitive a client is. So the higher the value, the client will actually be willing to pay more because they're not so worried. And if you ever notice this, and I think it comes back also to the PAIC, the pain in the ass curve, is that the lower the price you charge, the lower value you provide someone, the more sensitive they are to price. Like trying to move a client up just $25, like if they're paying $25 and you try and move them to $30, that's like a 20% jump. Like that's just $5. It's tiny, but they're so price sensitive because the value is so low. And so trying to increase price with a low value item is incredibly difficult. So what he's done here is he's overlaid onto top of it the accounting services. And again, I found this to be very, very accurate. And when you start thinking about the accounting firm, it makes sense. So for example, on the left-hand side, you've got the bookkeeping, payroll, compilations. And if anybody is in public practice, they know that clients seem to not want to pay for bookkeeping, which for an accountant, I know it breaks our heart and it's painful because you need the right numbers to know the business, but it's interesting how they do not value it. And this is just a fact. This is not a judgment call. This is just fact. Clients find bookkeeping to be of low value. But as you start moving up the value curve, you'll notice that clients start valuing things more and more. And now we move into tax problem, tax resolutions, tax planning. Clients willing to pay more than they were for the bookkeeping services. Again, go higher up the curve. Farther up the curve you go, estate planning, niche services, valuations. And the interesting thing that Rick has positioned on this curve is the external CFO, which is like that quarterback, that trusted advisor that can help them, guide them on their entire picture, their entire portfolio. Not their portfolio, I think that's the wrong word for it, but their financial world is that external CFO. For example, like I was working in my first accounting firm, and I was determined to get rid of bookkeeping services because it was just so low end. And what happened was that I ended up doing a M&A transaction with a client, and we value priced it. And the amount of money I made on that one valuation, on that one merger and acquisition, literally dwarfed my earnings from the previous accounting firm, like for those 18 years. Like it literally dwarfed it. I made over $700,000 on one deal, and that basically blew my brain out of the water. I couldn't understand how I could make that much. I'm going to show you a little bit later how you can actually make that much money by having the conversation with the client ahead of time. But this is the value curve. Now, the interesting thing that Rick overlays on top of this, which I think is a really, really important thing to notice, is that he puts this other overlay onto it, that efficiency actually drives down price. Efficiency drives down price. So I've been saying this for a long time, that racing to get AI, racing to get offshore, racing to offshore, racing to AI is going to drive down accounting firm prices. It's going to drive it down because in an economic model, when it becomes cheaper and cheaper and easier to make something, the price goes down. So if anybody owns a big screen TV, they'll note that the prices of the big screen TV is actually less than it was 30 years ago. Why is that? Well, because they're making them quicker and easier, and it's more efficient to make these TVs. So it actually drives down price in an overall economic model. And so efficiency, trying to just do things quicker and faster, isn't going to help you increase your prices. It's actually going to do the inverse. It's going to make it worse. And the interesting thing is, when I was in the accounting firm, the first 18 years with my multiple partnership firm, they were so focused on getting things done quicker. How do we be more efficient? Let's make it more efficiency. That's not the route to higher prices. It's actually effectiveness. So you move over to the other side of the curve here. It says effectiveness drives up price. So the more effective you are in delivering value, that's what's going to create more upward price insensitivities, and clients will be willing to pay more money. For that one client, he was willing to pay an inordinate amount of cash for the M&A transaction because he desperately wanted to get out of his business with his brother-in-law. And if anybody knows how, has done any work with family members, you'll understand that. And so he was very, very motivated to get out of that deal. And the transaction was a large transaction. It was over $100 million transaction. And you've got a higher effectiveness, therefore he was going to be willing to pay a higher price. So David, have you seen any questions or anything come in so far on the value curve?
Not yet, no.
Okay.
Oh, well, there's one, but it can hold till the end. There's nothing.
Yeah, okay, that sounds good. So, all right, so there's the value curve. So let's also go back and we're going to spend a little bit of time thinking for yourself. And if you can overlay, either if you're in accounting practice or in your accounting world, think of the value curve and apply it there. So you can go back and apply this direct value curve to what we're about to talk about. Or if you're in a different business, think about what the value curve would look like in your industry or your profession and what you're doing right now. And let's think about, where is your time being spent on the value curve? And so in exercise 3, what we're going to do is I'm going to give you a couple minutes here to write this out. And this can be a very fruitful exercise, is to determine what kind of services you're currently providing And then what we're going to do is we're going to give you time to write down how much do you think you're doing in the present moment, how much you want to do in the future, and what your action steps will be. So for example, I've got some sample copy in here of a typical accounting firm where it's like they're spending say 20% of their time on bookkeeping, but they actually want to get to 0% in the future. And again, I have a business coach, and it's interesting because I coach accounting firms and I coach business owners, and I have a saying that if you have a coach who doesn't have a coach, you need a new coach. So my coach is Dan Sullivan from Strategic Coach. I'm also actually an associate coach for Strategic Coach, so I coach entrepreneurs as well. And so my coach, Dan Sullivan, has this saying. He says, your eyes only see and your ears only hear what your brain is looking for. And I mentioned that earlier, but I forgot to quote it back to Dan. Your eyes only see and your ears only hear what your brain is looking for. So in all my coaching, I'm like, well, let's tell the brain what to look for and what to listen for. So you have agency over your thinking and your future. And so putting a number in the future of what you want your future to look like will trigger your brain, will activate your brain. So then your eyes will see and your ears will hear opportunities to get you to that future. So let's spend some time here writing down what are the services that you're currently doing, what's your present percentage, what's the future percentage, what do you want to move it to in the future now that you understand that you can get higher prices from adjusting your mix of work, and then what specific action steps you're going to take on this. And again, I'm going to give you about a minute or two to take some time here to write this down and think about your thinking. So here we go. Give you another 30 seconds there. Another 15 seconds. All right, there we go. So let's keep going, shall we? So let's do key number one. The summary here is the key to positioning. Key number one to increasing your prices is positioning. To increase the value, position yourself higher on the value curve. And in this example is the maximum positioning is that of the CFO or the quarterback. So you can maximize your value with positioning. So key number two is client conversations. And this is, I call it the transformation versus the stuff. Okay, so the first 18 years when I was in public practice, I used to tell my clients all the stuff I was going to do for them, their tax returns, their planning, their financial statements. What I found was as soon as I shifted in the next 8 years when I had my second firm, I talked to my clients about what was it they wanted in their future. What was the transformation that was going to happen? And there was always, I was either removing some sort of pain or I was adding or increasing some sort of pleasure to it. And ultimately, we're talking about a bigger, brighter future. Clients were looking for good feelings. So this was really interesting. I asked them what they wanted in their future, and then I said, tell me what it would look like once they had achieved that. Once they had achieved that, and that's where the magic was. They would actually, the value was the highest in their mind when they could envision a future that was greater, and they would actually articulate it to me. So they actually told me what the value was. And this is the interesting part. This is before you even start the work. So the client conversation moved away from talking about the stuff. Stop telling them what you're going to do and start focusing on what you're going to give them in the future. And this is, again, there's a key here. There's a quote here that my coach, Dan Sullivan, shared with me. He said, your money is always in someone else's future. So it's in the future. That's where the value is. That's where your money is. That's how you're going to create the value in the world, is in someone else's bigger, brighter future. So again, you can maximize your value by actually having the right client conversation. So talking to your client about their future and not about the stuff you're going to do. And then the third key that I have here is about the billing model. So in the billing model, I'd say there's two kind of versions, right? There's value price subscription model, and then there's billing by the hour model. So we'll call it value pricing versus billing by the hour. And so I like to think of the billing by the hour as the simple show, like The Price is Right. Okay, set your price as high as possible, the value without going over. And I don't know if everybody remembers The Price is Right. It is still going, I believe. So, but it just also dates exactly how old I am. So there you go. So set your price as high as possible without going over the value. So that's value pricing. Now, I knew that because from point number 2, that the value was greater before I started the work with the client. This was the exact time to actually agree to the price. So this is where art meets science. So get the price as high as possible without going over the value. So I often say, if the price and the value align, the client will sign. If the price and the value don't align, the client won't sign. And the conversation with the client ahead of time about what the future would look like, what the transformation was, and what their life would look like after it had been achieved, the value in their mind was the maximum. It was top. That's when it was the time to actually set my price for them. And so in the Accountant Success Formula model, I show accounting firms how to value price on two special ways. One is a special project and the other one is ongoing services. And so doing special projects like I did with my M&A transaction was a change order. We call it a change order, and Rick Payne and Paul Dunn called it that. So I've adopted that verbiage. And then number 2 is ongoing services as a subscription model. And the subscription model is what I'm going to talk about in this presentation, is having clients in on a regular model. And subscription models I've been talking about for the last 10 years, but now they're really starting to come on stream. You notice every streaming service, your mortgage is almost a subscription model. If you can think about it, that you can actually pay more for a mortgage if you pay monthly instead of paying all at once. And here's the wonderful additional value drivers of moving your clients to this billing model, this value-priced subscription model, is that the client knows the value ahead of time. It smooths out their cash flow. I gave them unlimited access to call me when they had a question, and they could cancel at any time. So simply taking my clients from the old model of billing by the hour and shifting it to this value-based subscription model, it actually increased value. So just changing the billing model, not doing anything different, just changing the billing model and the relationship with them, increased value for the clients. And the interesting thing is, a lot of the questions that come in, is one of the concerns that a lot of accountants have is like, well, if I give my clients unlimited access to, I'm gonna be so busy, they're gonna call me all the time. And well, we're not that popular. I gotta just put that out there. If the client's calling you all the time, chances are they're probably landing on the low part of the PAIC curve. So they're probably causing you a ton of pain because you're not charging them enough, and that they're a lower value client. And ultimately, my experience is this has never been a concern. And the reason why I'm kind of talking about this one is because of what everyone noticed or everybody put in the poll, that your time is the most important thing. And this one can be a fear factor for a lot of accountants. It's like, oh my gosh, if I give my clients unlimited access to me, I'm going to be so busy, I'm never going to have any time for myself. It's actually the inverse, because once you have the right pricing point, the right number of clients, you're actually going to enjoy clients calling you. You're going to want them giving you more calls so that you can actually do change orders and special projects with them. So this is what I found is key number 3, is that this billing model actually increases value. And the interesting thing is that existing clients are actually willing to pay an additional 25% to even 100% more than the previous year's annual fees. I don't like using fees very often because I like to think in terms of price and value, because they see more value in the model. And this happened to me. This happens with every other firm that I've worked with. Clients love it. They love the model. And again, not all clients, and I'm going to be straight up on this one, but the clients that don't want to be on your model are more likely to be the clients you really don't want to have in your system anyways, because they don't value you. They actually are you're more of a commodity to them. And again, when we go to the value curve, think about it. If you were actually up at the higher end, the clients actually had reliance on you, they would want to be on this model. They would like it because they would actually get more access to you. So the interesting thing when you actually do this changeover is it not only creates more value for the client, but it creates incredible value for yourselves. And no more work in progress. So I don't stress out about what to bill. No more accounts receivable. I'm not chasing my bills. No capital requirements to support my accounts, my WIP or my AR, which I love, pulling out my partner capital account. So I don't have to put money into my business to support my balance sheet. And it smooths out cash flow for the firm. And so the valuation of your firm will increase on exit. So this is another thing too, if anybody's thinking about selling their firm in the future, this is increasing the value of the firm. So the example, I was working with one client in Quebec City, and we doubled the firm valuation in 18 months by shifting it to a value-based subscription model. They went from $10 million to $20 million in 18 months by shifting it from a billing by the hour to a subscription-based model. It increases the value of the cash flow of the company and the increased billing that came through that increased price without having to increase the expense side of the equation. So here's the key number 3 summary again on billing model. Value-based subscription versus billing by the hour. Capture the value ahead of time. When the value is the highest, do it ahead of time. It creates 4 additional value drivers for your clients, and it creates all those other benefits that I just talked about with the WIP and the AR and the value of your firm. So you can maximize your value with your billing model. So here's the 3 key summary again. So there's 3 keys to increasing value. 1 is positioning, 2 is client conversations, and 3 is your billing model. Okay, so we've now answered the questions to why we'd want to increase our prices, right? And so see what I just did there? See how you increase your prices, right? I didn't mean to do that. It's because it's going to increase our freedoms. We've looked at how money, clients, and time all interact with that. And so by increasing our prices, we're going to get more money freedom, we're going to get more client freedom, and more time freedom. We've covered off the what. Price increases by increasing value. That's how price and value are interlocked. If the price and the value align, the client will sign. If the price and the value do not align, the client will not sign. So we want to increase value. And the 3 ways we can increase value simply in the accounting firm model is by changing our positioning on the value curve, by changing the way we have a conversation with the client and moving it away from talking about what we're going to do to what they're going to get in the future. Not only that, but what does their life look like after they achieve that transformation in the future? Let them tell you what their life will be like, and they actually create the value for you. And I can't stress this one more than possible. The client will tell you the value. The client will sell themselves on how valuable your services are, because they are going to transform themselves into the future, tell you what their life will look like, and that is the transformation. And remember, your money is in someone else's future. They will actually tell you how much value there is there. As soon as they get to that visualization of the future, tell you what their new life will look like, that's the time to set the price, because that's when the value will be the highest, right there, when they have that emotional feeling about what their life will be like after they experience the transformation. So that's the client conversation side. And then the last one is the billing model. So we change our billing model from billing by the hour to subscription-based value pricing. It increases value through those 4 metrics we talked about. Not only does it increase value for the client, knowing their price ahead of time, smoothing out their cash flow, giving them unlimited access to contact you, just having the ability to contact you anytime without getting another bill increases value, and they'd be willing to pay more for just having the access to you. And they can cancel at any time, so they're not locked into a contract. And so those 4 value drivers will increase value to the client, but also you have all the increased value inside your firm with those 4 points that I also talked about with your WIP and your AR. So let's go to how. So now we've done why, we've done what. Let's go to how. How can you implement the 3 keys to increasing value so you can increase your prices? So, and if you increase your prices, you get to claim your 3 freedoms of money, clients, and time. So we're going to change our positioning. You can change your client conversations, and you can change your billing model. These are the 3 things we're going to look at. And so what I want to do is another exercise. I want to get you a little bit of pen to paper again. Is like, which of the 3 keys are you going to take action on and when? So in here, I want to, again, let's set this up. Let's do 1 column with the 3 keys: positioning, client conversations, and billing model. The specific actions you're going to take. And more importantly, make sure you put down a due date, because if you don't put down a due date, your brain won't take it seriously. So you always want to put down some sort of event or a number or a due date that will make your brain take action on it. So your eyes will only see and your ears will hear what your brain is looking for. So I'm going to give you a little bit of time to write down these 3 keys and some specific action steps that you could take and a due date when you're going to do them by. I've got a little bit of a sample copy in here for you, and I'm going to give you another couple. I'll give you about another 60 seconds here, or 60 to 90 seconds to do a little bit of thinking and to write this down. So let's go again. Maybe another 30 seconds here. Ten seconds. Okay, there we go. There we go. And just as a note, the music that you've been listening to on those little breakouts is called Unstoppable Momentum by Joe Satriani. I think the word is incredibly fitting because that's what I like to give my coaching clients, is unstoppable momentum. And it's a little bit rock and roll, which is what I am too. So I love that. So there you go. So let's go and kind of summarize this up on what you have clarity on now. You have clarity on the 3 questions: the why, the what, and the how. So why you would want to increase your prices so that you can have your 3 future freedom goals. So now you have clarity on that, what your future freedom goals will be in those 3 areas. What the 3 keys are to increasing value, so we know that. And now we also know how. What are the action steps you can actually take to make progress on your 3 freedom goals, which we just walked through on the end there. And so, David, I think we've got another poll here. There we go.
Poll is launched, and we have one more poll to get to after this.
You betcha. Can you see an opportunity to implement an idea from this presentation in your business? Yes, no, I'm still not sure. And all progress starts by telling the truth, so please tell the truth.
Okay, we've got 85% who voted. Okay, so I'm gonna close the poll. I'm gonna share the results, which is 83% yes and 17% I'm still not sure.
I'll take that as a win, David. I'll take that as a win. I'll take that as a win. So quick little blurb here on what I do. I coach CA firm owners on how to maximize their 3 freedoms of money, clients, and time. Again, I have a program called the Accountant Success Formula, and I have 3 options. I do an online course, I've got group coaching, and I do one-on-one. Again, there'll be a handout here that David can send to everybody. And if you want to have some contact with me and see if there's a fit for you in one of those programs, or if you want to go explore that under the accountantsuccessformula.com, would be lovely. Be more than happy to have a conversation with you. And so now we're going to open up to our Q&A. Do we have?
So we do have some Q&A. We're not going to get through it all. So if you have a question unanswered when you do the survey and exit, just note in that, and then I'll pass it to Eric to get back to you. But looking at our list, one of the comments we've had coming up from Joan Johnson is that you can create value when you have experience and expertise. The problem is when persons following this formula do it for basic services, positioning themselves as high on the value curve, and I guess they then can't justify it. Does that corroborate what you've been saying, Eric, or is that another opportunity?
Well, yes and no, yes and no. So just because you are doing, like, so if I'm assuming someone's feeling like they just do bookkeeping services, and I'm going to take this example. If someone does bookkeeping services and they're afraid that they can't do M&A transactions, they don't have the expertise to go in the high end, that they somehow can't get higher prices for their bookkeeping services. No, the focus should be on, if you're a bookkeeper, talk to the client about their future. What do they want as a result? You can still use the client conversation to actually increase your prices. You're just not going to have as much price. You're going to have some price sensitivity to bookkeeping services and lower end, but you're going to be able to expand it more by having the right conversation and a different billing model. So positioning may be difficult, but here's the interesting thing. If you start talking to your clients about their future and about what they want in their future, you're naturally going to move yourself up the value curve. They're going to start seeing you not as their bookkeeper, but as their strategic advisor. So just by having a conversation about what they want in their future and what you can do to help get them there is going to naturally move you up the value curve. So it's not like this is not available to you if you only do bookkeeping and you can't do mergers and acquisitions or tax work.
So Eric, one quick question before we do the last poll and close, and that is, how do I design pricing around value instead of hours when my work is recurring work like tax compliance?
It's the same model. You can tax compliance and you're doing tax returns, you can still have the conversation with the client about what their future is and increase the value of the price of the tax returns. I have some clients that are in the US and they do 1040s, a lot of 1040s. They have their clients on the subscription model, and they just lock them in and they give the clients unlimited access to talk to them throughout the year. Even though they're not doing work throughout the year, they're just doing year ends. You can still have them on that.
Right, and I've launched the final poll, Eric, because we're in our last minute, so people can respond to that.
And this, yeah, so and this is if Canada and Norway play a match in 2026 FIFA World Cup, who would you cheer for? Because I live in Canada, but I'm originally from Norway, so I'm curious to see if anybody has a preference on Canada versus Norway, or if you're neutral. And I thought it would be a fun question and a poll there, just so that you get your.
And we're 88%, Eric. I think that's close. It's 60% Canada, 13% Norway, and 27% neutral.
Oh, there you go. Well, in any event, if either Canada or Norway end up playing together in the World Cup, I will be torn apart myself. So
excellent. So with that, we're at a close. I would like to thank you, Eric, so much for your presentation today. There will be a survey for people when you exit. If you would like to connect to Eric, please note that in the comments. Our next webinar is going to be on being an internal audit rock star, and it has its accompanying heavy metal soundtrack. So maybe we'll get Eric back to listen in on that one. And that's going to be on the 19th of May at noon Eastern. So with that, any last words, Eric?
No, this has been a lot of fun. Thank you, David. I appreciated the opportunity to be of service.
Thank you all, and we'll see you next time.